Well, let's start off with a broad view at the markets. Yes, we've seen light volumes this week, but positivity has certainly been glaring. What sense have you made of the market movement?
I think what we're generally seeing is that, like you said, there's light volumes. There's very little movement or very, committed movement in either direction. But I think, what we're waiting for is next week when the key market players are back from holiday and for us to gather some kind of direction and to see hopefully some sustained movements, either, beyond the critical 28,000 level of the Aussie that we have seen reach this week. I think we're sitting at about 28,200 somewhere there, and so what we're looking for is sustainability going from next week when key players are back. But yes, a very good start to 2010, very optimistic for a lot of players in the market.
Of course, a lot's hinging on US jobs data this afternoon. Many optimistic that we'll see that figure come in flat. Are there big risks to coming well below expectations, because this could well throw a major spanner in the works?
Yes, I think that with that the data that's coming out this week, the whole market has been holding its breath the entire week, waiting for it. And non-farm payrolls are important to show the health as well as of the United States, as well as to give us some kind of direction. It's the first key data that's coming out today. And look, there are major risks to the downside. It went up. It was improved in December, so they're expecting another improvement now in today. So I think we will see later on what will happen, and it will actually move the market. So I think we will expect in our market to see a little bit of a slight pullback as we get closer and closer to when the United States open. But we can see from the FTSE as well as the JSE that we've got good expectations of the data that's going to come out today.
Well, we're looking at a scenario in Ntombenhle where we've got the US thinking that more stimulus might well be necessary over in the States. On the other hand, we've got the Chinese Reserve Bank possibly starting a monetary tightening policy, or tightening of its monetary policy moving forward. How's the market reading those contradictory developments?
I think there was a bit of a shake-up earlier on this week when we saw China tighten, but it tightened ever so slightly. I think it was by 0.04% or something like that. Where that was just to eat up or to remove some of the excess liquidity that was in their money markets. And I think that was also just a once-off, short-term movement that China did. But I think why the market reacted was because it was a surprise move, and because people are anticipating. And because the Fed has also hinted that they may raise rates this year, I think, there was a bit of a panic in the market where we saw that pullback happening in commodities as well as in the currencies. But, as I said earlier, sustainability will be the key going forward. And the United States has said that they will be looking, at other alternatives. But I think what we will end up seeing is that they will keep things as is to see what the stimulus has done to the economy. Has that been sustainable? And then look forward and put in some forecasts as to what else is needed in the economy. But whether they will hike rates or not, I think that, I think not anytime soon, perhaps towards the third quarter of the year.
Of course, we've just now outlined the context in which markets are operating globally. Given that this is the case in Ntombenhle, looking forward to this year, especially more intently over the first quarter, what are some of the key areas you'll be focusing on?
We'll be looking at risk appetite to see whether the United States has got some risk appetite, and to see, especially from next week, what happens, where do the traders sit, and what are their outlooks for the year. But as we saw last year, fundamental economic data doesn't seem to be moving the market as much as it should be. It seems to be the trend is your friend at the moment, and it seems to be that the market has got its own momentum. But we'll see. We'll also be looking to see what commodities do, especially as risk appetite improves. We expect commodities to do better. But there are risks to the downside. Should the economics of the United States worsen, you expect a major pullback. And we've seen that the United Kingdom is not doing well so far. And our main trading partner, the Eurozone, had some mixed results this week, with Germany not doing so well, or as well as anticipated. But those are the things that we're looking at going forward. But I think it's very difficult at the moment to, especially so early in the year, to form much of an opinion as to what will happen within the first quarter. But mainly, I just think commodities as well as risk appetite would be key.